Hey guys, this is Christian with Good Eats FX. This is another video in the mentorship course. This is part 2 of market profiles. We are now considering consolidation programs. It's very simple, guys. We're going to keep it extremely easy to understand. And what I want you to know about consolidations is this. IPTA is in a state of accumulation or distribution. All right, it's a scalper's market for day traders. And we're basically sitting out until we see price impulse away from equilibrium with a swing point present. All right, that's the basic terms. Let's get into the charts and I'll show you a little bit more. Let's go. All right, so guys, here we have on the daily chart. Okay guys, so here on the daily chart we have a range basically here. This high to low was the overall range of last year from April till now. And what I'm going to do is I'm going to put the annotations on the chart and I'm going to show you how we read the ranges within a big consolidation on the daily. Why am I starting on the daily? Because if you can see it on the daily, price is fractal. You'll be able to see it on the 1 hour, you'll be able to see it on the 15, and you'll be able to react faster. That's the only difference when we change time frames, guys. When you're on the daily, you have more time to actually make a decision when you enter on the 4 hour and the 1 hour. When you're actually entering off the 15-minute, you're seeing the same type of fractal nature, but the difference is you're deciding faster, okay? So let's put some annotations on here, and I'm going to walk you through every single thing, and then we'll show some examples on the intraday. Let's do it. Okay, so here we have a couple different shaded areas, and what these are representing is internal ranges within the overall daily range created on the year last year. All right, so what I want to show you is from this low to this high, we broke market structure here and we went above equilibrium, the midpoint, right, into a premium. It's very simple. When we enter a premium, we're waiting for a swing high to form at an array. Key point, at an array, above liquidity. You want to see that, okay? So we run the liquidity here, we break structure, we're above equilibrium, price is now considered expensive, and IPTA state of delivery will now change to go back into a discount if it's going to further accumulate, okay? So we hit this bearish order block, we form swing high, we run down, we break structure. You're going to see this a lot in consolidations. It's like, I'm breaking structure to the upside, I'm breaking structure to the downside. What do I do? Calm down, follow the overall trend inside the consolidation, okay? The moment that it makes this low, finds fair value at this fair value gap here, and pushes right back up, creates these equal highs, right? Pulls down, makes what? Another higher low here. We're consolidating in a discount. We are going to be looking for buys because we have a low, a higher low, another higher low. We're respecting fair value and we're not in a premium, so we buy. It's very simple, guys. So from this low to this high, we actually break structure, and what do we see? We see price decline again at the premium array, which is this fair value gap. And what happens next? Price runs back down, breaks structure, runs the sell stop manufactured in the previous dealing range, and we make a swing low. Where are we, guys? We're below equilibrium. So if the trend is respecting the lows, meaning we're making higher lows, although we're still consolidating, we're in a consolidation to the upside. So the one who's getting punished more in this consolidation are sellers. Every time it gets to a premium, they get a nice little run, and then buyers come in, and price is propelled back to the upside. So in a situation like this, as a day trader, what am I looking for? I'm waiting for that swing point to form and give me strong impulse to the upside. That's what the example we're going to show today. All right, so let's take a look at today's price action. What would I be targeting first of all if I saw a big impulse away from equilibrium? Well, we have these nice equal lows here. You know, we have a nice set of equal lows here, and we have an untapped OB right here, as well as over here. So there's a lot of discount down here, a lot of liquidity resting. So I have this magnet here to basically say, hey, if we break away from equilibrium to the downside and this swing high forms and we run this low, we'll have a new dealing range, right? Just like we created these dealing ranges, we're going to create a new one here. Vice versa, if it breaks out to the upside and runs these relative equal highs, well then there's those equal highs and then there's a greater equal high up here. But right now, we're focusing on the range from here, these equal highs, and these equal lows here. All right, so let me go ahead and put a magnet up here as well, because we do want to highlight that these are the two potential areas that price will come to, okay? So let's drag that out. There we have it. We're either going to run these equal lows or we're going to run these equal highs, okay? We just need to know as day traders, what direction should we be trading in overall, okay? We're stuck in a consolidation right now. What direction would you be going in? You have this low, you have a higher low. This is a swing low at equilibrium. Isn't that what I have been teaching so far in this video? We're looking for an impulse away from equilibrium. Well, this is a strong impulse away from equilibrium. Well, Christian, I see a fair value gap here, and price is probably going to respect this swing high. Fair perspective to have. We're in a premium. It's possible. It's possible for a run back down. And we have a fair value gap down here. And if that's what price action wants to do, I'm going to show you now on the intraday timeframes what to look out for, and I'm going to show you some examples from actually recent week price action to show you. So I'm going to focus on this area, and then we'll talk about this projection here. Let's go into the intraday timeframes, fam. Here's New York session, and let's look at last week. When we got into this area, look at the overall market profile here. Very much a seek and destroy type of day. Can you agree on that? What would you say? I would say here in London, we had a midnight price open. We went straight to the upside. So let me mark midnight price opens next. Price impulses to the upside. Okay, London was a rally to the upside. Fantastic, taking out previous day high. What happens in New York? Swing high form, price drops aggressively, taking out sell side, which is previous day low. And then we go back into range and consolidate off. This is what I'm talking about, guys. Everything is happening based on equilibrium here. Notice that. We went above equilibrium, we hit a premium array, we sold. We went below equilibrium, we hit a discount array, we buy. All right, it's not rocket science. Well, Christian, how do I know what to do for the next day? Remember the rules. It's very simple. You're looking for a swing point to form at equilibrium. I've left equilibrium on the chart for a reason. It's very simple. Look at the swing point that forms here in London, a retest of the order block. How else are you going to learn this stuff if you don't go back, look in hindsight, and say, where can I really see these entries happening? Get on a demo account and look, see this happen. What happens when price creates a swing low? They run away with impulse to the upside. When they get to their premium array present, and what happens? A swing high forms. Am I telling you that this is going to be easy to do? Yes, I am. I am telling you this. Well, how do I know which array to use? You have to look at the arrays above the liquidity. So remember on the daily how I was pointing out the liquidity? Look at these equal highs here. This is liquidity, is it not? This is liquidity. We have the liquidity here. Okay? So if that's the liquidity, and we run those stops, and this is the premium array, this is exactly what I've been saying since the beginning of the video. We are looking for the array above the liquidity. Okay, price makes a swing point. It comes down, makes a low. This is just like this day, guys. Okay, this is very similar to it. We run down, we hit a discount array of this range. Here's the discount array, and what happens here? Price comes down and pushes back up. Okay, and it ultimately ends up in range of the day. This array is currently where price is bouncing off of. So now, when you see retail traders creating zones, you're saying to yourself, well, what's the difference between this? Well, I'm putting a lot of narrative into this. Okay, consolidations are trapped order flow. We understand that. We're seeing a week thus far trading within a range that it's created since Sunday open. And the thing that you have to watch out for is what liquidity are they creating? What is the liquidity being generated in the market, and what's likely to be ran? To me, I see clean lows at this order block where we've been holding support, where retail's been selling up here and buying down here. This is what I see. I see that we're in a premium. We're above the equilibrium on the daily, and I see that price is wanting to trade to the downside again. We're starting to get expensive. We've already ran liquidity here. We've already hit resistance at this bearish order block. So this is where I would see price likely go to next. And that's how you would trade at consolidation. And I would want to see it come back down here into a discount and show me more willingness to buy if that's what it wants to do. It's very simple, guys. Same thing for the upside. Well, we have the same thing. We have relative equal highs, right? And what rests above that? We have a large sell side imbalance, right? This only offered sell side delivery. See, the fair value gaps aren't just areas where price has to come back to balance the market. It means more than that. These SIBIs actually are telling you that there was only sell side delivery here. There is no buy side. So you have a liquidity pool resting right above here in this fair value gap. So for all of you guys who are made it this far in the video, what are we going to do next? We're going to find equilibrium of the consolidation of this week in this price range from this low to this high. This is the range that we're trading in. From this low to this high, all right, we're going to look for equilibrium. I'm going to mark equilibrium. And there you have it. This is the range that we're looking at. We want to see an impulse away from equilibrium. So going into midnight, for all you guys who trade consolidations, this is it. Praxis Facto. Keep it simple, guys. I wanted to do something different in this video because I want you to realize it's not about being right. It's about being consistent in these setups. You have to only train your mind to do consistent things, okay? You know, ultimately, I believe that USD CHIF is making higher lows and that they want to come into this liquidity pool to the upside. That's what I think. I think we'll likely see a return up into this area here before we see any sort of decline or continuations. It just looks like the overall trend is bullish in this consolidation, and we have this discount here, and we had the impulse price away from equilibrium on the daily. So when you guys go into consolidation profiles, just remember what I showed you today. Remember that it's IPTA being in a state of accumulation or distribution. We wait for impulse swing points away from equilibrium. It's very, very simple. You don't want to just buy at 50%. I'm not telling you that. I'm telling you to look at the price action from 50%. Okay? And when you really look at it on the 15-minute time frame, let's take a look. I'll show you. You'll see what happens. Let's go to the day over here when we had this liquidity generated here. Okay? Look at this day. Price open. It rallies all the way up, creates this high right here. It runs previous day high, which is what? Bullish intention. A run on previous day high for the day trader is the objective. That is the first target for the day trader if you're bullish. So this would have been it for the day trader. If you were bearish, your objective is to run previous day low. So they come from this high in New York and run the previous day low. This is a seek and destroy market profile, right? But what they actively did is they generated liquidity to the upside and they ran stops on the downside. Do you guys see that? We have a stop on here, right? And then we immediately create displacement. We push back down, institutional order flow entry drill off the premium level of this gap. We come up, we hold price, and that's it for the day. But what you need to understand is what this day is setting up is the next day. Look at this Asian session. They run the buy side, they pull back into equilibrium. This is it. This is the lesson, guys. They pull back into equilibrium. And what forms that equilibrium? We get a strong down candle at a bullish order block here at the 50% of Asian session. Notice it's always coming back to 50% in consolidations. You want to see the swing points at those levels, okay? This is the gem here I'm giving you. And then we get a strong push, and what happens? They run and run and run. They take out these intermediate highs here. This bearish order block, not a chance, right? You get a reaction here. Small reaction on this bearish order block. This is the discipline of the day trader. If you're going to hold it, you have to understand that there's going to be pushback. If this is a London move, look at the time that this retest happens. This is New York. This is a New York-based pair. So you're going to see the major movement in New York, and boom, what happened? Major displacement to the upside, run on stops. They hit the premium array, and then price finally calms down and closes. All right, so we can go on and on the examples, but as you can see, there's a lot of money to be made in consolidations. Just remember the number one tip that I showed you is when price returns to equilibrium in the dealing range you're trading in, you want to see a swing point form there and impulse away towards the liquidity. Above the liquidity, you want to see a premium or discount array, depending on the direction you're going in. All right, please take the time to go back in this video. I'll see you on the next one. If you enjoyed this video, guys, make sure to go back rewatch it before you go into part 3 because we're going to be talking about continuations. Let's go, fam.